Hey guys, welcome back to the channel and welcome to this video. And in today's video what I'm going to be doing is I'm going to be showing you a really simple strategy, and this strategy is predominantly for people who have a full-time job or they don't have much time to come to the charts and things like that. Or you can also use this strategy if you just want to use it in general. So what I'm going to do is I'm just going to note down some of the rules that I have when trading this strategy. So first of all, if I just go and get the text tool here. So first of all, what we are going to be doing is we are going to be sticking on the 1 hour chart. So what using the 1 hour chart means is if you're working full time, you can go to the toilet, or you can nip off for a couple of minutes at the top of every hour, and then you can go ahead, check your charts, see if the most recent low or high has been broken, and if it has, then you can set your order. So the 1 hour chart is really simple. You only have to check it every now and again. It's something that you don't need to be sat at your screen for, so that's really useful, if you've not got much time to monitor price. So what you're going to do is you are going to set an order. So set order at the most recent low / most recent high or inside bar. So if there's an inside bar, what you need to do is you need to take the order from the inside bar, because what I've found is when placing an order at the most recent low or most recent high, and there's an inside bar, sometimes price will retrace to the inside bar, and you could take you out or anything like that. So yeah, if there is an inside bar, I would enter from the inside bar. Another thing you're going to be doing is you are not going to be setting no TP, so no take profit. So not setting a take profit means that we are going to be trailing our stop loss. So every time an high gets broken or a low gets broken, we're going to be moving our stop loss to the most recent high or most recent low. And this way what we can do is we can squeeze as much profit out of the market as possible. And this is a really great way to manage a trade instead of setting a TP. Another rule I have is a fixed stop loss of 20 pips. So what I have is a fixed stop loss of 20 pips no matter of the trade. I just have a 20 pip stop loss every single time I place a trade. And what this means is, sometimes you might get a position, you'll get a lot of drawdown, and other positions you won't get a lot of drawdown at all. But for me, the 20 pip stop loss has eradicated and stopped me from having a couple of losses. So that's one thing I like to do when placing a trade using this strategy. And yeah, like I mentioned before, you will need to check the charts. So check charts every hour. So you will need time to check the charts every hour, but like I said in the beginning of the video, that you don't need to sit at your screens and you don't need to monitor price constantly. You can just check the charts every hour, and then what this means is you'll be able to set an order in a couple of minutes and you can get back to whatever you was doing before. And that's the beauty of this strategy. Some of the returns on this strategy are incredible. I've seen really great percentages. Obviously you will take losses with any other strategy that is in Forex. You will take losses, but then again the percentage gains is pretty phenomenal. And there's two other little rules that I go by. So if there's a large wick, avoid the trade, because what I've noticed when there is a large wick on the end of the candle, what price will do is oftentimes it will range, and if it doesn't range, it will just completely reverse and take you out. So one way I have managed to avoid a lot of losses is by avoiding trades with candles that have huge wicks and very large wicks on the end. And another thing is if it pulls back, and breaks, trade invalid. So if it goes, so for example, let me just draw a little diagram here. So for example, if we come down, we pull back, we come down again, we don't reach our entry point, and then we break down again and break this low right here, and break this low. That means that trade would be then invalid. And I'll just draw a little diagram of the entry model. So what I would be doing is I'll be waiting for price to come down, pull back, break the low, pull back to this area here, and then obviously continue. So where we would enter is we would enter on the retest of this area here. Whether that's the most recent low or the inside bar, it doesn't really matter. Obviously, you will just be looking at what's going on at the time. But we just literally enter here, and then we are looking for price to continue. So what I'm going to do now is I'm going to go on my charts, and I'm going to show you some real life examples. So I've just deleted this right here. Yeah, I'm just pull price up. As you can see, we are on AUD USD because this is, literally one of my favorite pairs to trade this. I found that it works really well. So what we need to do, first of all, once we get to the charts, is we need to come over to the left hand side, come to where the trend line is, click on this arrow, and you will need to choose the horizontal ray. You can star this if you want and make it a favorite, but choose the horizontal ray. And then what you need to do is attach it to the high. So as you can see, it's red. You can make it whatever color you want, and then you can drag one out by holding Command and then clicking on it and dragging it if you are on Mac. If not, I think it's Shift. So if you're thinking, how do we tell which is the high and which is the low, I'm going to show you right now. So what you need to do is, so this is our most recent low, and if we work back, so this trades higher, 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 lower. So what this means is that this is our high. And then again, if I do an example for a high, so this would be our high right here. So then we go lower, 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 higher. So this would be our low. For example, right there, that would be our low, because this one, this candle right here, this blue one, trades lower than this one. That one trades lower than that one. That one trades lower than that one. And this one trades higher, which makes this our low right here. So for me, this is our low right here, trading back, higher, 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 lower. This is our high. So all you need to do, I just recommend going on your charts and seeing if you can see this, and just practice your highs and lows to begin with. So hopefully it will become more clear as the video goes on. So what we are waiting for is we are waiting for the break of the most recent low or high, whichever comes first. As you can see, we have now had a break, but for me this isn't a big enough of break. Like I said, we need a clean break in order to get involved, for me anyway. And what I need is, a body close ideally would be what I'm looking for. As you can see, we have now reversed. So this would be my low. This would be my high. And actually this inside bar would be my low now. So what we're waiting for is just a break. So as you can see here, we've got a break, but for me, it's not a clean break. What I'm waiting for is a little bit more of a break in order to get involved, because this candle here is what we would be getting involved on, and for me, it's very, very close, and it's a little too close for me to take this trade. So waiting for the next candle now. We come up, obviously we've broke a little bit higher. This would be our high. This would be our low. And where would we now set the order? So we would get a long position, and we would be entering on the most recent high right here. So what I do personally is I enter 2 pips above or below. So 3.3, 5.3. So as you can see, that is now 2 pips above. I then enter with a 20 pip stop loss, which is 200 ticks. Click on OK, and all we're waiting for now is price to trade back in and see if we can get involved and see if this trade is a winner. So as you can see, we get tagged in straight away right here, and we have continued up. We've had a pullback, so this would be our high, and we've come down and we've been taken out. So that is a -1%, which is absolutely no problem at all. So just waiting for the low or high to be broken here. So we've come down, we broke. This would now be our low and our high, because it's taken out the low and it's also the high. We've had a break, we've had another candle up. So for me, as you can see, if you want to be able to see the inside bars clearly, what you can do is you can go to your indicators and you can get the inside bar indicator right here. I think it's called IBS V2, and you can make it whatever color you want. So mine in this example would be white. So if I just zoom in a little bit, so now it's broken and it's a nice clean break there. So I would look to enter this trade. I would click and go at the inside bar, like I said before. I would go 2 pips above, so 619, 639, and then I would have a 20 pip stop, which is obviously 200 ticks. And then again, I'll just wait to see if I get tagged into this trade. So do we get tagged? Yes, we do. We get tagged right there. And then we've come down into drawdown, and then we have exploded to the upside. So what we do now is we move our trend lines. So this will be our high. And then what do we do to find our next low? So this candle, this inside bar trades lower than this, and then this trades higher than the inside bar. So that means the inside bar would now be our low. So now we can go ahead and we can lock in some profit. So as you can see, we have 0.5% locked in at the moment. And like I said before, with the 20 pip stop loss, is this trade here come really into drawdown, and then it exploded to the upside. So if you had, for example, a 15 or a 10 pip stop loss, you would have been taken out of this trade right here. So a 20 pip stop loss is a sweet spot in my opinion. So for me, as you can see, we've had a break of this high. And for me, what I'm going to do is I'm going to look to enter again on this inside bar because we are in profit and we've locked in some profit. What I would say, if you are looking to scale in, make sure you are risk free. If you've still got risk open on your first trade, don't scale in because you're adding double risk basically. So what I'm going to do is I'm going to enter in on this inside bar. I'm going to go 2 pips above, so 854, 874 with a 20 pip stop, and see if we get tagged again into this trade. So then we would have 2 trades up and running. So we're now tagged into a second trade, and then we've broken the high. So this would be our high now. And how do we find our low? This candle trades lower than this candle. This candle trades lower than this candle. This candle trades lower than this candle. And then obviously we come down, we come up. So for me here, this would clearly be our low. And what we can do now is we can reduce our stop loss on this trade, and we can move this trade a little bit more into profit. So we have 0.61 on this trade, and we have about an half a risk on this trade right here. Again, we break higher. So with me at the moment, I've still got risk on this trade, so I'm not looking to actually enter on this trade here. You could enter if you want to, but for me, it's a little bit risky as I've still got risk on this trade right here. So we've had a pullback. Do we break this high, and can we lock in more profits? So we do break this high. So this is now a high. We come down, we trap back, and this is our low right here. So what we can do now, so we can move this second trade into profit. So on the second trade, we've got a 0.41 profit. And then on this trade, if we move it up, we are currently at 1.6. So between those 2 trades, we have a 2% profit. And all I'm going to do now is literally just play price forward and see if we can get into more trades and stuff like that. So as you can see right here, we've got an inside bar. And because we are in profit on both these trades, I'm going to look to enter again on this inside bar right here. So again, 2 pips above, so 193. What we're looking for is 113 with a 2 pip stop. So 2 pip stop, and do we now get tagged into this trade? We come back, we are tagged in, and price goes ahead and breaks this high. So this is now our high. Our low is this one right here. So we can now reduce the risk on this stop loss, and we can continue to move, these 2 into profit. So that's 0.66. That's 1.83. And then again, we break the high. And as I mentioned before, I've still got risk on this trade here, so I'm not willing to, scale into that one. But what now has happened is now this is our high, tracking back to find the low. This is our low right here. So we can move this up. And then as you can see now, all 3 trades have now been moved into profit. So currently we have 1.16 on this one. We have 2.86 on that one. And we have 4.04 on that one. This one was a -1. So if you do the maths, we're waiting profit right here. So what we're looking for now is just simply to see what happens next. And we've ranged a little around a little bit. And now as you can see, we've come down and we've been taken out right here. So with us being taken out now, we have 3 trades in profit and 1 loser. So we have a 4% here, we have a 2.86%, and we have a 1.67%, which works around roughly 8.5%. And if you take this off here, a -1, 7.5%. So as you can clearly see, the power of this strategy is well and truly there. You could have got involved on this trade here as well if you was willing to take the risk. there's a trade right here, which obviously we got involved in. You know, and then what you need to be looking out for as well is, if I just come out of replay mode, what you need to be looking out for is, you know, trending markets, and that's what we want to be involved in. You don't want to be involved in, you know, price action like this here, the ranging price action. So if price is breaking highs, retracing, breaking highs, retracing, and then coming down and breaking the lows and retracing, you know, what I'd say is just simply stay out. And if we come back and you can see what kind of market we was involved in. So as you can see again, we come up, well, there's still trades in this leg here, but we've taken, what, 7.5% with a -1 there. We first entered our winning trades on the 2nd of March, and we got taken out on the 4th, so that's all within 2 days. You can do this as much as you like, and as I said before, you know, the potential for this strategy is massive. So let's just have a look here for a minute. You know, we get a breakdown here. You would enter here. So for example, you would enter at this low, 2 pips below, with a 20 pip stop, 20 pip stop, and you know, it's broke the low, you move your stops to here. It's broke the low, you move your stops to here. It's come down, it's broken the low again, so you move your stops to right here. Obviously, then you get taken out for a 3%. You know, like I say, the strategy is very, very simple, and you know, overall it's massively powerful. So before taking this strategy live, what I would recommend doing is going onto your charts and, you know, backtesting this using a demo account for a couple of weeks, whatever it may be. Go ahead, backtest it, forward test it, everything like that, and just see how powerful this strategy is. So if this video helped you out, guys, and you did take value from this video, I would appreciate it if you could drop a like on today's video, subscribe to the channel, and I'll see you in the next video.